Back to the breaking news we've been following. The Federal Reserve cutting interest rates by 0.25%. This is the second time the Fed made the move this year.
All right, we're joined now by Michael Armstrong from the Armstrong Advisory Group to talk about what it could mean for you and all of us. All right, inflation has come down.
It has.
That was a key factor for the Fed in making this decision and making that first rate cut decision back in September. But as we discussed after that half-point cut, it takes a while for this to trickle down to consumers and see a difference in their credit card rates or maybe their home equity lines of credit. And interestingly enough, mortgage rates actually may have dropped a little, but they've been since going back up. So what is behind all that?
Yeah, so it's important to just draw this distinction between short and long-term rates. And the short ones are what the Federal Reserve controls. And so unfortunately for most of us, we saw the rates on CDs and money markets and savings accounts come down almost immediately.
Always.
You did benefit a little bit on an outstanding home equity line of credit might have come down a little bit too. Mortgage rates, surprisingly, going in the other direction. And there's a few reasons behind that, but largely the recession that could have been didn't materialize.
Mm-hmm. Right.
Okay, well, so a big factor with this past election among voters was the economy.
Yes.
And the Fed chair, Jerome Powell, he's been asked about this return of Trump to the White House. So what do you foresee happening here?
Well, one, they've got an interesting history together.
Yeah.
Jerome Powell was appointed by Donald Trump and faced a lot of criticism from Donald Trump. He was asked by a reporter today if Donald Trump asked him to resign, whether or not he would. He said
No.
he didn't plan to,
Yeah.
and he also felt it was illegal for Donald Trump to remove him.
It'd be really hard. The legal experts have looked into that the
Yes.
last time around. It would be really hard for him to fire the Fed chair.
So, look, I think that this Federal Reserve has done an incredible job of avoiding political pressure from the White House in their decisions. And so I don't expect it to be the case. But as we saw from markets yesterday, there is now a new type of economy being priced into these markets, which could mean higher rates, higher inflation, and the Fed may need to react to that, but clearly not yet, because they made that clear with today's meeting that, hey, we still see a path for rates to come down.
All right, so the Fed initially said when they started this easing process, this rate cutting process, a point in cuts maybe this year, and then additional cuts next year. Now we have a new president who's going to come in, and he's got a lot of things that he's promised to a lot of people, a lot of tax cuts, tariffs, things that could kind of juice the economy. So is it possible that the Fed does not talk politics traditionally, but they have to be looking at this now through that lens, and might they slow down these rate cuts? But also Donald Trump has said, I want lower rates. So what do they do here?
Right. So I think the answer is not ahead of time. They are a very data-dependent group of people. They are going to wait until they see what actually happens. And there's no guarantee that any things that Donald Trump has promised on the campaign trail will get into law. But it does seem likely that the existing tax cuts will stay in place and other things like that. So there is very much a question as to whether or not the Fed will need to pause. And I think they will wait until they see what happens to do so. So it does seem likely that you'll see more interest rates and more interest rate cuts this year, and perhaps more late next year.
Okay. Michael Armstrong from Armstrong Advisory Group, thanks for joining us.
Thank you so much.
Good to see you. Thank you.